This is Commodity Wrap. I'm Tony St. James. Our guest today is Brian Hoops. Brian is president of Midwest Market Solutions. Brian, welcome to the show here on a Wednesday, and we welcome you in with, an interesting day of trade, a lower trade for corn as the December contract slipping almost 9 cents on the session. After a higher trade on Tuesday. Now, beans were higher on Tuesday, and, just not even pulling out the rug. This is completely knocking the floor out of it. We lost over 27 cents on new crop, falling below that $12 level. Meal, oil, lower. As far as the wheat went, we saw kind of a mixed trade in wheat and a lower trade in cotton. Now that I've kind of given us the dimensions of the room, let's start putting the furniture in here, or taking it out. What happened with the beans?
Yeah, talk about taking it out. We took a lot of premium out, especially in soybeans. You and I were talking before we went on here. 62-cent losses since last Friday's close. And it really hasn't rained in too many areas. There's a couple surprise rains, and usually there is, but I think it's the forecast for that rain event that's supposed to be coming later this week and into the weekend that has the trade attention. Seasonals turn lower here for soybeans as well, and I think those two factors are taking a little bit of premium out of the soybean market. By last week we were trading that 12.40, 12.50 range, and boy, didn't take us long to fall all the way back to trade into now what looks to be $11.90, $12 range. And we're hoping we can find some support here at these levels. I would not suspect that we'd see a lot of additional downside risk or downside support, but the technical trend may be changing here, and that may lead to fund selling. And when we start talking about funds buying, fund selling, sometimes that gives us bigger moves to the upside, bigger moves to the downside than what we would normally think.
Yeah, again, just casual observance here. Do markets tend to maybe sometimes go over when, as far as going up, do we have a tendency sometimes to go higher than we should, and then when we come lower than we should, before we kind of start settling into where a real value is?
Oh, absolutely. We see that almost every day in the marketplace. We see that in almost every market. We saw that in cattle, I think, here with this big sell-off on Monday into Tuesday. I think we went lower than fundamentally justified. Maybe we went higher in soybeans and corn than fundamentally justified last week. Market is maybe trying to price it in here now. Are we more accomplished at around $11.90 or $12 given the size of the crop? And that's one thing that's challenging about the markets. It's always moving, always changing. The fundamentals always change day by day, minute by minute, and what the market perceives of those fundamentals changes rapidly as well. And we talk about yield and rains, and are we growing a 53 bushel bean crop and 183 corn, or is it something much larger than that? Maybe it's something smaller than that, and that's what the market's trying to come to grips with. And so we've seen a lot of volatility. You will see a lot of volatility, especially in a weather market, because that's when you can really change that fundamental outlook on a daily basis, and you can change it really, really quickly. And we've seen it here this week, where the outlook last week maybe was hot and dry and how small this crop is. Now we get some rains over the weekend, a little surprise. We get forecasts for rains this week. Now we're starting to talk, hey, maybe we are going to have a halfway decent crop, and yield models don't need to come down as much as what was at one time expected. So, yeah, exactly. We're definitely going to trade too high, too low. And when you get the funds involved, it's a lot of momentum. They can really swing the markets with their weight of their buys and their sells, as they were aggressive sellers today.
Let's talk a little more here on the bean side. We were higher on Tuesday with soy meal and a pullback on Wednesday. Now, bean oil slipping again, and that seems to be one of those that when it's moving higher, we're taking off. And I mean, we're Forrest Gumping as fast as we can. And then we just stop. And then if we're going to go lower, we Forrest Gump back the other direction. Is that just me maybe overstating it? It just seems that's what's happening with that bean oil market.
Yeah, it does seem like that. You know, the bean oil, you would have thought, I guess I would have thought anyway, that bean oil would be higher today, given the fact that crude oil was surging 7% higher, over $5 higher. And bean oil did not. It dropped pretty sharply today. And if there's two markets, if you look at a chart that are starting to show a lot of technical weakness, meaning taking out some, either whatever you use, moving averages, a trend indicator, or anything like that, they're starting to show a lot of weakness. It's bean oil and soybeans after today's trade. So beans, oil has been kind of a darling in the last 12 months of the commodity market's a real bull market, but it's starting to slip in here and showing a lot of weakness from a technical standpoint. So I think we're starting to see a lot of the funds who've been long starting to liquidate down positions. We had them at one time back maybe a week ago. They were long nearly 130,000 contracts of bean oil. They could be under 100,000 contracts net long at this point in time.
Okay. And since we're there, EIA out with their data as well. We see, I mean, there's a lot of different directions you can go with that EIA data. Obviously, we look at it from an energy perspective, but it also ties back into our row crops and like corn through ethanol. Did you have a chance to see any of those EIA numbers?
Yeah, you know, they were pretty good numbers as far as demand for corn. Ethanol daily usage was a new high for this week of the year, eclipsing the 2024 level, and we're up 3% on the week and 3.5% from last year. We also made a new high in stocks levels, 24.7 million barrels. That's the highest since May of 22. So we are using a lot of corn to produce ethanol. Corn use has reached almost 5.1 billion bushels, and you know, we were almost 113 million last week. We only need to be averaging about 91 million to reach the USDA forecast for this marketing year. I think that's one area the USDA is probably too low as far as their demand profile goes. They need to increase. I think they're at 5.575 million bushels being used for this year. Probably need to bump that up to at least 5.6 million bushels, maybe even a little bit more than that. We're on a really fast pace to hit that USDA forecast.
All right. We're talking with Brian Hoops. Brian is with Midwest Market Solutions online, midwestmarketsolutions.com. This is Commodity Wrap. This is Commodity Wrap. Our guest, Brian Hoops, President, Midwest Market Solutions. Brian, we were watching not necessarily the bottom fall out of the market in beans, and we saw pressure in corn. Wheat was lower. Cotton, pretty much every row crop was lower on Wednesday. But you look over in the livestock, and especially after we started the week with, well, locked limit losses in the feeder market, we were a little higher yesterday, but I was wondering whether or not we wanted to go down and test some new areas here. We didn't do that on Wednesday. We moved higher in both live and feeder cattle. And one quick note on the live side, I can't remember the last time we were trading the front month near where we traded cash trade. Thoughts here?
Yeah, we're almost on par. And it's interesting, we're getting into the delivery period, and we're almost on par with the cash trade. So strength actually led by some of these deferred cattle contracts. October at one point actually traded higher than last week's highs today. Now, we didn't close that way. We closed back below that area, but at one time we took out last week's highs, which from a technical standpoint, once again, that looks pretty favorable. In fact, earlier this week, we made a new low, taking out last week's lows, and now we've taken out last week's highs. We are on pace to have kind of an outside reversal week in the live cattle, and it comes on pretty bearish news from the standpoint of the border being opening. So last week we saw a higher weekly close on the weekly charts. We saw a market that put in a little bit of premium, and now an outside reversal. I think it's going to tell these fund traders who maybe don't watch the fundamentals all that closely, hey, it's time to be buying cattle, just from the technical aspect and what the charts look like. From a fundamental aspect, we had a really strong week of export sales last week. We finally have hit a price level that's going to stimulate that demand. The saying is, low prices cures low prices because demand picks up at these lower levels. But we had the second largest export sales week of any week in 2026 last week. And so at these lower levels, yes, demand is starting to pick up once again. And that is probably telling us, I think, we've put in some significant lows here for now, and we should try and move higher. So if you take away the border opening, and I think it is a true statement that there's not more cattle between the U.S. and Mexico. We haven't changed the number of cattle. It's just where are we feeding them? How are we going to process them? Exports in the U.S. should improve. Our corn exports may slow down a little bit, but other than that, it's great. I mean, I think we're in a process of putting in significant lows in here and ready to start moving possibly significantly higher like we did a year ago.
All right. And before we go, just quickly here, the energy market's moving higher, equities lower. Final thoughts?
Yeah, you could see these energy markets continuing to move higher. Crude oil has a gap on the charts that I think wants to go target up around 87.75 area. War in Iran and the U.S. doesn't seem to be settling down, even though President Trump's trying to make peace. Iran doesn't want that peace, and that things keeps us straight at Hormuz. While there's some ships flowing, not everything is flowing like normal. That's going to keep that pretty tight, and crude oil prices elevated. The Fed left interest rates unchanged. That was for the fifth consecutive meeting that they've had, and we talked on TV this morning that if they would have raised rates, it would be bearish for the dollar, or it'd be bullish for the dollar. It'd be bearish for commodities and stocks in general, leaving rates unchanged. The dollar's down this afternoon. Stock market is starting to see green. Gold and silver up sharply. This in turn should help out the grains if we can absorb this news about the rains. And once we get that factored in, some of these outside markets are a little bit supportive.
We're talking with Brian Hoops, President, Midwest Market Solutions. Where do we find you, Brian?
You can find us online at midwestmarketsolutions.com, or you can give me a call directly at 417-501-5132.
Brian Hoops, Midwest Market Solutions on Commodity Wrap.